There we go. We got the announcement and everything.
It's official.
It's very official. Cool. So everyone, solid understanding of venture, kind of knows what I'm talking about. No need to dig too much into anything there. Perfect. Cool. So when you think about kind of quote unquote fintech, I think, and Anthemis has been around since kind of 2010-ish. And that was a really interesting time for fintech because for the first time you saw kind of a movement away from the pre-digital era of financial services into the digital first era, right? And this was largely kind of the advent of the smartphone. And so you see people for the first time not have to go to a physical bank location to refinance a mortgage or take out a home loan or open a deposit account, right? You could start to do some of these things from your phone or computer. The early examples of this kind of digital first unbundling are probably robo-advisors. So one of our portfolio companies is Betterment. I'm sure a number of you use Betterment or kind of a similar product today. A lot of kind of payments tools as well. But it kind of started very simple, right? As kind of that progressed, you started to see every point solution at a bank being unbundled from kind of the core brick and mortar locations and being offered through your phone. And so this happened from everything from robo-advisors to brokerages to payments modules to deposit accounts to mortgages to insurance products, right? It kind of just everything went everywhere, and companies were started that offered those individual point solutions. What's been interesting over the past 5 years or so is all of those companies have started to try and rebundle the customer, right? And so I don't know, I assume a number of you have Robinhood, right? Robinhood started as a brokerage. You can now have kind of a cash management account where you earn some APY. You can start to begin to offer some of these other services on top of that. But what they've started doing, what Betterment started doing, what all of these kind of fintech products have started doing is offering additional products and services to try and capture you as a customer more holistically, right? And you even have seen that in banks. So you started to see now kind of neo banks / challenger banks who have tried to compete on just that, the kind of core banking products and services, deposit accounts, savings accounts, et cetera. Where I think the past 2 or 3 years, and probably where the next couple of years will go, is what we call our embedded finance thesis at Anthemis. And so this is the idea that you have, you've kind of reached this era where you've had this unbundling, this rebundling, but everything's largely stayed the same, right? Everything's digital, but it's largely stayed the same. The idea is that now you start to expand the definition of what fintech means. And so where previously fintech only meant traditional banking solutions, you start to see some of those products and services embedded in adjacent spaces. So, I mean, if you think of things like an ISA, an income share agreement, or an HSA, or all these kind of financial products and services that are, or influencer economy, for example, in the media space, all of these kind of core financial products and services have started to show up in adjacent spaces. And I think extrapolating that out a little bit, what will be interesting is when you no longer kind of, the definition of fintech no longer exists, right? So there's not kind of this separate payments module or a separate risk management module. And then on the other side, there's like a media company or there's a healthcare company. Everything kind of frictionlessly operates intra space. So you see, payments in the healthcare system being frictionlessly embedded. You see, checkout flows frictionlessly embedded. You see insurance products frictionlessly embedded. And I think that's kind of where we see the space going. And so you'll see Anthemis has started to make investments in companies that might not look like traditional fintech companies. One of the investments we made was in a company called Flow Technologies. And what Flow does is it's a hardware device that clamps onto your water main in your house. And I know probably no one on this call, including myself, owns a house right now, but you can think about the water main in a house and what it looks like. That is a hardware company, right? They created a water main or a clamp for your water main. When it detects a micro leak, it shuts off the water main. And water damage in a home is the #1 cause of home insurance claims in the US. So when we engaged with Flow and when we started talking to them and ultimately made the investment, we pushed them a lot to think about kind of the fintech application of that. And the fintech application of that became an insurance product. So if an insurance carrier was able to sell Flow devices to their consumers, or if their consumers were able to show that they had a Flow device, all of a sudden your premiums could go down because you had this kind of safeguard against water damage. And if the Flow device didn't work and your home was flooded, you as a consumer, if you had a Flow device, would be insured against that damage, right? So again, that's kind of one example, and it goes a million different ways, and happy to talk about kind of the different ways in which it goes. But that's the idea, is that, again, fintech starts to expand much, much further. So that's kind of an overview. That's kind of the last thing I'll mention on the thesis, I think there's a lot of ways to cut fintech. We choose to do it in a way that's fairly straightforward. It's on our website. I think you'll talk to a lot of different investors who all kind of have different ways of thinking about the fintech universe. You could split it enterprise, consumer. You could split it infrastructure, non-infrastructure. You could, a million different ways. We do kind of what we call our 6+1. So kind of 6 core buckets, and then we have another area that we invest in that's called data, technology, and infrastructure. But just to quickly name them, #1, we have retail banking. So think about companies like Robinhood or Happy Money or Betterment. We have business and corporate banking. So think about like any kind of SMB targeted solution, small, medium business, or large business. We have payments. We have wealth and asset management, insurance, capital markets, and then the 7th is data, technology, and infrastructure. So no kind of revolutionary way of thinking about the space, but it's a way that we've split it. And if you look at our website, you kind of see the portfolio split up that way. Please interrupt me and ask questions, so it's not just me talking to you guys the whole time.
Yeah, no, thank you very much for that overview. It gave a ton of information. I just wanted to kind of bring it back kind of on a personal note and talk about your own journey into VC. You mentioned that you were at Ernst & Young, but kind of what inspired you to enter into the space, and how were you able to break through? Because I know that's what a lot of people are curious about, is how to get into the space, because it seems so prohibitive.
Perfect. Yeah, it's tough, and I think it's kind of purposely tough, right? So it's funds are, a large team is not necessarily required to deploy a fund. You kind of, the work only goes so far. What's really important is kind of the passion side of things. And I realize that's a very intangible and somewhat frustrating thing to say, right? But I think what is very important is to find a way to demonstrate kind of a passion and an interest in the space. So, you kind of mentioned, and I mentioned this, like I worked at EY, right? And I had a lot of work at EY that had to do with kind of early stage stuff. And when I was at EY, I figured out how to kind of get into that space, but I don't think that's in itself enough, because you want to show that other side, right? You want to show that not only are you kind of thinking about this space, this early stage or late stage, if you decide to do later stage VC, not that you're only thinking about it kind of professionally, but that you're very personally tied to it. And so I think what is really interesting is if you can kind of show that somehow. So I mentioned, I think earlier, like crypto was an area that was really interesting to me and that I did a lot of work in. And so started a crypto newsletter, and it was like nothing phenomenal. We had a couple thousand subscribers, but on like a weekly basis, we just push out like, hey, this is kind of what we see in the market today. And I think that helps you as not like pushing newsletter necessarily, but it helps you as an author and as a potential investor start to kind of hone theses and ideas about the space and stay up to date on kind of developments. But it also again shows that like this is an area that you think about not just kind of 9 to 5, but you think about it, on a much more holistic basis. So that's probably one, is like demonstrating a mix of personal and professional. I think two is network. And I know in school you got like networking's probably thrown around too casually. I don't think it's that kind of networking. I think it's building a very purposeful and very intricate ecosystem of people in the early stage tech space. And so this is not like going to a dinner and like sharing a business card and hopping on a 30-minute phone call. This is building what would eventually be, if you're an investor, like your sourcing funnel, right? So I think whatever that kind of defensible ecosystem is that you have built around you allows you to find proprietary deal flow, and it allows you to meet with amazing entrepreneurs who are just thinking about their ideas, or meet with other investors who have kind of interesting companies that they're looking at but might not be quite a right fit for you. And then what it also allows you is just kind of an understanding of what jobs are out there. And so, I think VC is such a kind of network driven career, that demonstrating that you can already bring that network to bear is really important. Specifically thinking about undergrad, and is this mostly an undergrad audience?
Yeah, I think it is. Also, I'm not sure if you noticed, we also got a question through the chat too, if you want to address that.
Okay, cool. Yeah, we'll do that. But to quickly finish there, so I think as undergrads, you're actually very uniquely positioned, because so many of I think like startups have just started to go younger and younger in terms of founders. We're backing like an incredible pair of founders that like dropped out of high school, right? And have like decided to start this really cool company in kind of the creator space. So you have a very interesting network of people that you talk to every day, who are your friends, who you see at class, where funds will really want kind of that networking and that connectivity. And whether that be kind of starting out as a scout for a fund. I know there's a lot of funds that look at kind of college kids for scout programs, whether it be, starting to angel invest in some of your friends' companies and being able to show that you have kind of an early portfolio. I think these are all things that you could think about at school, that then is kind of a multiplier when you get into the workforce. And then Alex, I'm just reading, would you include B2B services? So for everyone, would you include B2B services that serve banks and hedge funds as fintechs? Sounds like they would fall outside of the definition. Would it be in the last data and infrastructure bucket? Yeah, totally. So definitely would consider it fintech. I think it is in our kind of data bucket, but also could be very nicely bucketed in capital markets. One company in our portfolio, Kaiko, is Kaiko, is a data provider for the crypto asset space. So it's very difficult to kind of extract and abstract exchange data on crypto assets, and it's especially difficult to kind of find historical data, historical texts and such. So what Kaiko has done is built this like very easily queryable database that's distributed by APIs and kind of allows hedge funds or institutional clients to access network data from the crypto space. If you think about a hedge fund specifically, like, or even anyone that really has market exposure, everyone is vying for the most proprietary, the most defensible kind of edge giving data that's out there. And so there's huge businesses that have been built solely on kind of on a differentiated basis, providing that data. I think as you kind of think about eventually becoming an investor or a founder, whatever kind of your prerogative is, the one concern with data is that it does become very quickly commoditized. So if you're, a market provider of data that everyone has, then all of a sudden, like, there's no real defensibility. So why do people pay for your product? So kind of an interesting consideration there. But yeah, I think that space is super interesting for sure.
Awesome. Yeah. Thank you so much. I guess my next question would kind of be, how do you see NFTs or blockchain on the whole kind of fitting into your space?
Mhm.
And do you see like any particular innovation that you find really like interesting or
Mhm.
dynamic right now?
Awesome. Yeah. So squarely within our thesis, and that kind of what I mentioned earlier about like the blend of personal and professional, like I love that space. I love NFTs. I love crypto, and it's cool because I get to go to work every day and find amazing companies that are in the space. So I'm sure I don't need to kind of tell everyone on this call how cool fintech is, given that you all are here. But super cool. I think thinking about trends, believe very firmly that eventually we will move to kind of a metaverse style interaction with each other, where you start to have this blend of kind of reality and an online persona. I think digital ownership is something that's existed for a very, very long time. Your email address, your phone number. I've had the same phone number since I was 11, right? And like that will hopefully be my phone number for the rest of my life. And it's kind of the first thing probably that I digitally owned. Um, Expanding that out and starting to think about, art or other kind of asset types that you can own digitally is very, very interesting. And I think there's a ton of opportunity in the space. I will say at the moment, valuations are a bit frothy. I think everyone's kind of rushing to get into the NFT space, whether that be kind of consumers or whether that be investors. Um, an interesting proxy bet that we've been looking at for a while are fiat gateways in the NFT space. So if you think about kind of being a consumer now of NFTs, you have to own ETH or Bitcoin or whatever, and you have to have a wallet, whether that be MetaMask or something else that you have on some of these NFT marketplaces like Nifty Gateway and Foundation App and Super Rare and all these kind of companies. For early adopters, that's great. I'm sure all of you are, kind of know very well the space. Yes, Grace, CryptoKitties, exactly. Yes. But in order to buy, you have to already have crypto. If you think about kind of bringing that mainstream adopters in, you need to figure out a way to get, like, my mom and dad do not have crypto, right? But they might want an NFT, but it's too complicated to push them off to an exchange to buy crypto to come back on. I think fiat on and off ramps are going to be really interesting for like DeFi, NFTs, kind of the whole space in general, to more frictionlessly move money from kind of the CeFi fiat ecosystem into crypto without all the friction and fees that exist today. But yeah, very, very interesting for sure.
Great. Could you elaborate on the gateways? I'm not super familiar. Is it basically like the idea where I could purchase like an NFT with like on my credit card and it would automatically transfer it to Ethereum?
Yep, exactly. So uh, I'm sure most of you have Coinbase. So Coinbase has built their own ACH rails, right? So they have integrated directly with the ACH system in the US. They also have kind of the ability to buy and sell on a card, but you're able to, through Coinbase, move money from your bank account, your Bank of America account, onto Coinbase to buy BTC or ETH or whatever it may be. That was a very costly and complicated process for Coinbase to set up. If you think about some of these kind of more niche DeFi protocols or dApps, they don't have the resources to set up those like natively integrated money movement rails. And so what they have to do is you have to already come onto the platform with a wallet with ETH. If you don't have that, they'll say, Nick, sorry, go buy ETH on Coinbase or some decentralized exchange, come back to us, and then you can interact with our product. There's a company, so there's a few companies, Wire, WYRE, there's a company called Ramp, there's a company called Transact, and there's a company called MoonPay. What they are all building are kind of embeddable solutions. So you can pay them a SaaS fee. They'll embed a little module or a widget into your app. And then through that module or widget, you can do what Coinbase allows you to do, where you can hook up your credit card or you can hook up your bank account and you can natively buy and sell crypto through. So it's kind of a customer fallout solution to an extent. And then Chen-Ying, I saw your message in the chat. So for everyone, mentioned not so fintech-ish companies like Flow as part of the Anthemis portfolio. What are some challenges working with these companies besides coming up with the fintech application of their services? Without being too cheap, I think that's kind of the challenge, but that's also the benefit. And it's as soon as you can make companies like that see the benefit of kind of, and obviously we wouldn't invest without like a strong alignment between the founder and ourselves that that's a direction they want to take the company. We never as investors like force the founder to go one direction or another. But assuming that we're all in agreement of like, hey, an insurance product on top of this would be super interesting, or hey, a payments product on top of this would be super interesting. It's actually a very easy conversation to have. You know, and this is a bit higher level, but like I think when you think about the VC universe, you have kind of generalist VCs and then you have domain focused VCs. Generalist VCs, frankly, I have no idea how they do their job because there's so many things out there that you can invest in. But they do a really great job of like looking across the universe, being able to kind of tie trends in one space to trends in another space, and are phenomenal investors because of it. I think when we engage with a company from kind of the governance level, we are recognized as fintech domain experts. We probably can't contribute a lot outside of that. I mean, we can and do, but you know, our bread and butter is fintech. And so thinking about kind of that founder conversation, it is actually relatively easy because they recognize the experience that we bring to bear. But again, that all requires kind of that upfront alignment. Did that help?
Yeah, no, that was great. Yeah, thank you so much. I guess just kind of moving in, as you mentioned about the generalist VCs and how Anthemis is more focused. What do you think sets Anthemis apart from like other fintech focused VCs?
Yeah, so it's kind of interesting. I mean, venture capital is an area where you're competing very often for these very amazing companies, but it's also a space like, and so that, but what I mean by that is like you're competing for the lead term sheet or you're competing for a check allocation, right? But what's also pretty cool is that, and this drives back to my point a bit earlier, it's all very network driven, and so there are very few kind of fintech VCs or any VCs for that matter that don't like to some degree all know each other. And so there's obviously kind of times where we all compete with each other, but there's also times where we all come together and form these really strong syndicates, all with the purpose of helping the company kind of reach their goals. So, you know, I think there's areas that we tend to focus on more than some other VCs. We are US, European focused, whereas others are more US. There's kind of a lot of different angles that we cut it, but, you know, I think it's always kind of a case by case basis, and definitely an area where we try to maintain very good connectivity with kind of the larger ecosystem.
Great, yeah. Just another follow-up question based off that. You mentioned that you're also based in Europe. Do you think that Wirecard's like massive scandal there has set back like the fintech community in Europe, or is it kind of relevant and moving forward regardless?
Yeah, no, it's a great question. I think that they were kind of far enough away from the kind of early stage ecosystem that I don't think it had that much of an impact. It had much more of an impact in kind of the more growthy stage or, you know, or early kind of public markets companies. I would actually draw the same parallel to WeWork. Obviously not a fintech company, but I think you saw kind of it at least caused people to really look hard at valuations in the private markets. WeWork happened at an interesting time where then COVID also happened. And so I think within venture capital, we spent a lot of time looking at our own portfolio companies as kind of, you know, I guess about 12 months ago to the day, and seeing, do they have business model resiliency, balance sheet resiliency? is kind of the valuation that they're at, is the trajectory that they're at strong. So from that sense, all of these kind of macro and also, quote unquote micro in the case of WeWork and Wirecard had definitely impacts, but I think the space is just so large and is moving forward regardless, that you kind of keep these things in the back of your mind, and they're incredibly important to have there. But you didn't see this like complete shift, I would say.
Yeah, fantastic. I guess just for some more general advice for kind of the undergrads on the call, is there any like commonalities that you've seen amongst like successful founders that you would like give out as advice to people that are looking to become prospective founders?
I think team is probably if you think about early stage venture, we don't have a lot to go off of. I mean, the calls that I'm having with founders, they have a deck and it's 2 people or 3 people, like used to be sitting across the table, now it's sitting across Zoom, right? I think finding a team that's passionate about the problem, that kind of back against the wall has the ability to fight it out, is also very complementary to each other, is all really, really important. I'd say definitely a balance of like building a large team while also making sure that you as kind of the founder, at least group of founders, don't dilute yourselves too quick, too early. But it's all about team in the early days, right? And kind of having that wherewithal, the passion and the understanding of the space that you're going after to bring in a very, very strong group of early investors. Tons of resources out there that I think everyone should be, if you're thinking about kind of founding a company, you should do a lot of research, tons of great books, tons of great kind of case studies out there. I think it's an incredible journey to become a founder. It's people that I get to talk to every single day, and absolutely love that. It's very tough. It's a ton of work. You're kind of at it 24/7, but would like to say it's all worth it in the end.
Fantastic. Yeah, thank you so much. That's one thing that we kind of, oh yeah, absolutely. I'm not sure if you see the question in the chat, but if you'd like, you can go ahead and answer that.
Yep. So the pandemic has changed the behavior of investors. Does the pandemic have any impact on VC focusing on fintech? So I will actually say, and not to keep driving back to like Robinhood, but it's a good kind of poster child of what's become, I think, catalyzed more strongly by COVID, which has been kind of the financialization of everything. So you see 7-figure baseball cards being auctioned. You see, we talked a lot about NFTs. You saw kind of the explosion of retail trading. You've seen from a retail standpoint, and even from kind of a high net worth and institutional standpoint, like you have seen financial services really, really take off and kind of gain a lot of traction. So I think it's becoming increasingly more and more hyped. There's a lot more attention coming to the space. Would like to say that we've been there for a while. So we've kind of seen what's been a very interesting arc. I mean, we've talked a lot about fintech. Fintech wasn't a word until like 2011 or 2012. Like no one in 10 years ago was saying the word fintech. It would have just sounded weird. And now, like, how can you imagine a world where that's not an investable thesis? So, I think we've been on this trajectory for a while. Xinying, just to answer your question directly, like, have been on this trajectory for a while. There's been increased deal activity, increased volume every single year for the past decade. But there's certain elements of COVID. We're all at home. We have a bit more disposable income. We, are connected increasingly more through platforms like Zoom, but also kind of like social platforms, TikTok, Twitch, all of that. That has just really catalyzed kind of the movement a bit further. And at the same time, all of the kind of incumbent players, large banks, other large financial institutions, are starting to become that. They're starting to become old and challenged by newer entrants. And so it's kind of forced in a way this innovation within the space. But it's a great question for sure.
Yeah, thank you so much for dropping questions in the chat. Please feel free to do that at any point in time.
Thank you.
And just to continue on with that, in your personal experience in like sourcing, has there been any particular companies that you've fallen in love with, or is it a little bit too early in your VC journey to say that?
Yeah, no, definitely. So this current fund we started deploying in January 2020. We have 14 investments. I think there's also a number of companies that got away or that we missed for sure. So it's always kind of a balance. I think the whole portfolio is really, really great. Would encourage everyone to kind of go online and check it out. Always, I'm not sure if you guys have my email or not, but I'm sure Nick can send it around. Always happy to talk about kind of any specific companies that are interesting within the portfolio. Probably one of the ones in the past week that's gained the most publicity has been Pipe. So website's pipe.com. It's kind of working in the revenue-based financing space, thinking more specifically about kind of non-dilutive capital. So very quickly, the idea is that if you're a startup that's looking to finance your growth, primarily a SaaS startup that's looking to finance your growth, you traditionally go out and raise venture capital, right? So you go out and kind of, which is dilutive. So you raise capital, but people like myself kind of get equity in your company. What Pipe is allowing you to do is quote unquote Pipe. So basically factor your subscription revenue. So they'll pay you upfront for your annual subscription. You'll kind of get that upfront capital to go finance your growth. On the back end, the consumer continues to pay. So the easiest way to think about it is Netflix, right? Pipe would allow Netflix to quote unquote Pipe or factor their annual contract values up front. You as a consumer continue to pay Netflix, but the dollars go to Pipe instead. So a very interesting company, a lot of kind of press release recently. So calling it out, but I think the whole portfolio is really interesting.
Yeah, that's fantastic. Definitely is a really unique way to kind of approach alternative funding sources, which is becoming increasingly important.
Totally.
Yeah, and I guess kind of to play off that a little bit more, you mentioned this a little bit in kind of your thesis with the embedded aspects, but do you see any larger trends happening? And I guess what companies do you think are most prepared to kind of disrupt that? I know it's kind of general, but anything you're able to give would be awesome.
Yeah, totally. So I think, and I kind of mentioned this earlier, but the kind of financialization of everything continues to be an area that we're just going to do a ton of work in. We're investors in a company called Rally Road. They're based here in New York. They securitize collectible cars and watches and Charizards and everything you can think of, and you can buy individual shares of those. The thesis there is that if you want to go out and buy a PSA 10 gem rated base edition holographic Charizard, it's like $350K. I don't have $350K lying around, but what I could do is I could buy 10 shares of that Charizard, right? That was not previously possible prior to Rally Road. I think, we talked about NFTs, right? All these different things, these different asset types are getting increasingly financialized. And I think, quote unquote, democratization of finance is a bit overused, but that's the idea, right? You're taking what's previously been unattainable and only attainable by kind of this ultra high net worth audience or institutional audience, and you're kind of democratizing it and allowing anyone to have access to that resource, whether it be asset classes or financial products or financial services, and I think that continues to occur. Baseball cards are probably another area where that's happening, right? The financialization of everything. So anyway, but that expands then to embedded finance a bit. So looking at adjacent spaces, looking at the influencer economy, looking at ISAs, looking at all these different kind of products that exist or that could have the ability to exist in these adjacent spaces like healthcare and media and energy and transportation. Healthcare will be areas that we continue to invest in. So would say that's an area we're super focused in. I think a bit unrelated to that, but also a bit related, infrastructure. So Anthemis looks very specifically at kind of the middleware of fintech. And you obviously have kind of the flashy companies like Robinhood and Betterment, where a lot of people try to do exactly the same thing. But you also have companies like Plaid and Stripe, where agnostic to which end customer app is successful, they will accrue value regardless. So you have a lot of newer entrants in kind of it's called banking as a service space. You have like Marqeta and Synapse, which are probably older companies. You have kind of Bond and Unit and Move, which are some of these newer entrants, but infrastructure will continue to be very, very interesting as well. And then I saw in the chat, Melissa, what customer segments around new fintech market entrants target many consumer-focused fintech service subprime consumers rather than facing off to incumbents? Is this the right approach? Yeah, consumer fintech is incredibly difficult. It's incredibly difficult. Again, I would probably put our split at like 80-20, maybe 75-25 in terms of kind of, more infrastructure-based bets versus more consumer-based bets, because consumers just a CAC to LTV equation, and CAC in fintech is expensive. If you have kind of an interesting way to hack your way into a large waitlist or kind of consumer audience, awesome. But yeah, kind of to your point, like there's a lot of different people going after the same customers. So it's just tricky. It's very tricky.
Great. Yeah, no, of course. And that's kind of true for all softwares right now. B2B is kind of the move.
Yeah.
Great. Yeah. So I'm just gonna move on to another question. Sorry, I'm just reading through my potential ones.
It's all good. It's all good.
Yeah. So I guess like through your experience with Anthemis, like, are there any like lessons that you've learned from the previous partners there that you think would be valuable to pass down, or the other incumbents who have been there for a very long time in VC?
So, and maybe this would have been a better answer to the question that you asked earlier about differentiation. But Anthemis has been built very purposefully to be with the idea in mind that financial services are evolutionary and not revolutionary. And so what I mean by that is, fintech specifically is not an area where you can move fast and break things. So you're not going to see like the next Uber in kind of fintech, right? You can't just like dump a lot of cars into or Bird or Lime or whoever, right? Like you can't dump a bunch of scooters into the city symbolically in fintech and have it work, because of regulators and all these kind of, as you said, incumbent players in the space that all have their own incentives in mind. So what we've been very purposeful about is building a large ecosystem of those more traditional FIs and kind of incumbents who either sit on our cap table. So Anthemis is a little unique in that we actually are structured more like an equity company. So we have kind of a holdco that we have investments in from a lot of banks and insurance companies, and it's really useful when our startups go to market on primarily kind of B2B, because we can engage that group of LPs and say like, hey, Kaiko is selling crypto asset data. Is that something you're interested in? And can help from a BD standpoint. And it's also really useful in kind of strategic conversations and brainstorming, working with those LPs to be like, hey, this is what we're seeing in the market. We're seeing a lot of startups that are building in this space. Is that a kind of strategic priority to you? So I think my advice would be probably more specific to fintech, but to build that like very interesting syndicate of kind of people who have been around the block, while also looking at this hyper differentiated early stage space.
Awesome. Yeah, I think Claire has a question. If that's why you're raising your hand. Go for it.
Thanks, Nick. So I'm not super familiar with the fintech space, but as far as I've seen, I think with fintech teams, it's always, it tends to be very traditional in the sense that the team has a lot of experience in finance, sometimes like bankers or that sort of thing. In your experience, have you ever seen kind of a more unique team composition that has resulted in maybe like more unconventional ideas within the fintech space?
Totally. So awesome question. I think really driving back again to this embedded finance thesis, as you look at those adjacent spaces, you might not want someone who has been in banking for 10 years, right? You might want someone who comes with a very fresh perspective. Part of the reason that, so actually, this company I mentioned earlier, in the creator space, the founder, dropped out of high school. They've never been in a fintech role, but they know the creator space really well. And we've probably talked to 100 people who have all been in finance and are thinking about targeting the creator space. In my mind, I'd much rather take the bet on someone who knows intimately kind of the challenges that creators have with monetization of audiences, understands the audience and the consumers, who are consuming the creator's content, and help them as Anthemis figure out the financial piece, but have kind of, again, that passion side of things and that understanding of the industry. So I would actually say, like, looking at the startups of tomorrow, that's going to become increasingly more important. You'll always have like an expert, right? So you always have someone, and this is where advisors, if you're thinking about starting your own company, where advisors come in to play, where you can engage this like really interesting group of people who can help support you in the early days. But sometimes having that like very unique, fresh perspective of things without being, tied down to like the old ways of doing things is actually, a defensible benefit in itself.
Cool, thank you. That's really helpful.
Yeah, great question. Thank you, Claire. So I guess my next question would kind of be, I know there's a lot of people in the audience who are looking more to enter into software engineering and potentially work for a startup, but I guess do you have any advice on how to approach SWE as like an investor and how to target and like choose what startup you want to eventually code for in order to really benefit from getting that equity?
Yeah, totally. So first, on the equity side, if you are thinking about joining a startup, I would encourage every single person here to go to Carta, which is one of our portfolio companies. It's CARTA, and they have a lot of amazing resources around understanding options packages, understanding kind of vesting schedules and grants, RSUs, kind of everything you'd need to know when you're thinking about negotiating whatever starter package you sign. There's no question too stupid when it comes to options packages you should have a complete understanding of what those questions are as you go to kind of negotiate that package. Software engineers and engineers are, the lifeblood of a lot of these companies nowadays, and you guys are very, very valuable employees and resources, and you should treat yourself as such. So definitely kind of read up, come prepared. I think on the choosing a startup side, find something you're interested in, find something you really like. It's easier to come to work every day if you believe in the mission and the vision of the company. If you're thinking about, if you kind of want the, identifiable universe of who you could go work for, obviously a ton of people out there. An easy way to cut out a bit of work for yourself is by looking at VC funds portfolios. And then a lot of VC funds, so we have our own page, have kind of career pages where they actually list all available positions across the portfolio. So, think about who the top funds are in your mind. Think about which funds you kind of believe in their investment thesis, believe in their ideology, and go look at their portfolio. And oftentimes there's a very easy way to kind of apply it to jobs that's not dropping your resume 500 places on LinkedIn. Yeah. And then Hugo, I saw, do you see quantum computing trending as the next gen of fintech B2B companies? Totally. I think quantum computing is really, really interesting. So it's definitely on our radar and definitely something we're looking at. It's a very, very complicated space. But yeah, I think it's definitely interesting and kind of on our radar.
Great, yeah. Also, thank you again, Hugo, for asking a question. And so I guess to move it back to a personal level, do you think, like, do you have any personal aspirations for founding your own company? And I'm guessing, would it be in the fintech space, or do you have any ideas or plans?
Yeah, so not sure. I think venture is an incredible space to be, because you get to every single day meet with people and talk to people who understand their space so deeply and get to tell you about their space. It's it's a very unique career. I think it's somewhat of an echo chamber sometimes. So like, not to harken too much back to NFTs, but like all we talk about and all we've talked about for the past couple of months has been NFTs, and then you'll go home and you'll be like, yeah, it's like NFTs, and no one's heard of them, right? So you're in this like super cool early stage ecosystem where all these ideas ideate, and it's a very exciting space to be. So I think very happy. I think it's one of the best jobs in the world. Would encourage you guys to all give it a shot.
Great, yeah, no, that makes sense. And why take the risk when you can kind of bet on 14 other companies at once instead of betting on your own? 100%. And I guess to continue on this track, could you kind of elaborate on your own college experience or anything that you felt like that you did in college that enabled you to kind of get to this point?
So I'm actually going to flip that, and I'm going to say what I didn't do. I think, like, go try everything, right? I think I knew, so I went to UNC, and at UNC we had kind of two main tracks out of business school. You could either go into kind of investment banking, or you could go into consulting. And so I knew I didn't want to do investment banking. So I went into consulting, right? And it was an awesome path. And I had a lot of fun. And you tried a ton of different things, and you got to work for a ton of different companies. And ultimately I found my way into like this kind of interesting early stage space, both on the side, but also at EY. I think if I could do it again, I would have gone and like tried stuff, right? Tried to work at a startup for an internship 1 year, tried to go see if there was like a student run fund on campus that was investing in companies, maybe tried to be a scout for a couple of months, right? Like, just go try a bunch of different things. Get involved in your friends' startups if they're working on them, right? Like, get some equity. Equity is awesome. Equity is a very, very cool thing. So yeah, I think that's probably the way that I would answer that question.
Awesome. Yeah, great. Thank you. Really good advice. So we mentioned you made the transition from E&Y and then over, but just to elaborate on that, did you approach like different VC firms and apply, or were you approached by a recruiter? Like how did that work? Because I've heard it going both ways for the VC.
Yeah, recruiters in VC definitely exist. I think I will say they probably target later stage funds a bit more, but definitely exists. There's a large universe of funds out there, right? And so rather what I would say is like, go just find funds that are find spaces that are interesting to you, and then find funds that invest in those spaces. So for me, it was fintech. I knew that I liked fintech. It was a space that personally I was very interested in. I loved crypto at the time, still do, but especially at the time. So started to look at the universe of companies that were investing in fintech. If you're interested in consumer, like, go find consumer shops. If you're interested in B2B SaaS, go find B2B shops, right? Like, and then I think from a recruiting standpoint, venture capital interviews and recruiting cycles are not like kind of traditional private equity or banking. They're very irregular. They, pop up when a fund is raised. They pop up when someone leaves. They pop up when they need an additional resource. But it's not like, okay, it's summer again, like, let's go find a new analyst class, right? So I think from that note, just staying close to the funds that you like, reaching out every couple months, saying, hey, here's what I'm working on. hey, here's a few companies that I found in this space. That's awesome when that happens, when people send companies that like they've heard of, that their friends are working on. I think that's an awesome way to get kind of a fund's attention. Even writing a quick IC memo on it and saying like, here's kind of my investment thesis. Here's a few KPIs about the company. I've talked to the company. That's awesome. Show that you have an interest kind of beyond just like, dropping a resume and a cover letter.
Yeah, that's fantastic. I'd never really thought about just outright sending them companies. That's definitely a great way to take initiative. I'm going to open it up in case anyone else has like one or two last questions to kind of close us out. If not, like we can kind of just start to wind down, but I'll ask one more question, just give everyone else like some time to prepare. But I guess if you had to choose like one, I guess this is more open-ended. So what is kind of your side versus like the retail bankers and the institutional bankers and the Robinhood versus GameStop controversy?
I mean, bring it on, right? Like, I think changing of the guard. I love changing of the guard stories. I think we've created this pretty incredible infrastructure already through companies that have been invested in over the past decade that, challenge the status quo and challenge the way that things are being done, and for the first time give power to retail traders. I think you have a responsibility then to not abuse that power, but like it's a new paradigm of financial services, and I think, yeah, let's try it out, give it a shot. I love it.
Awesome. Yeah. Thank you so much. Well, it seems like everyone has kind of had their questions answered. Just want to thank you again so much for giving us your time and really giving us a ton of great wisdom and stuff to think about. Oh, we have one more. Yeah, go for it.
Has COVID changed the deal flow at Anthemis? So at the beginning of COVID, I think we thought that everything was going to slow down. Deal activity, and I don't know how much everyone's been following kind of deal announcements and such as of late, but has done the opposite. It's gone up. Valuations are very high right now. Deals are getting done very quickly. We have companies that are raising seed rounds before the ink is dry on the seed round term sheet are getting preempted for A's. Everyone's sitting at their computer looking to do deals, right? There's no longer like traveling to go meet founders necessarily. Hopefully there will be soon. But yeah, deal flow has gone way up. Deal activity has gone way up. It's been crazy, but a lot of fun.
Awesome.
No, thanks everyone. Really appreciate it. Nick, awesome job running it. Thank you so much. Here whenever you guys want to talk.
Great. Yeah. Thank you so much. Thank you, everyone. Have a good rest of your day.
Bye.
Alex.